With the housing market surge, I should say, a new change is coming to the health insurance market. We are now joined today by our open financial expert who will share how exactly this will affect you. We now welcome America's money man and money answers man, Jordan Goodman, to the show.
Great to be with you, Daren.
Good. So as we're looking right now, we're taking a look at home prices, and home prices are taking a dramatic increase.
Correct.
Let's bring people up to speed.
All right, so the latest numbers just came out. On a national basis, home prices were up 10.7% in the latest month. That is an enormous increase, the biggest increase in 7 years. It's almost feeling like 2006 to some extent. And what's interesting around the country is the places that are going up the most are the ones that were most depressed. Phoenix, Las Vegas, Miami, they're up over 20% in a month. I mean, dramatic increases there. It's because house prices got really low, so it made it affordable for people. Mortgage rates are still relatively low, they're starting to rise, so people are jumping in. The new factor in the housing market is instead of people buying it for themselves, you're having big institutions buying them, like hedge funds, pension funds. I hear that Blackstone Group is buying $100 million worth of homes per month.
Wow.
And then they fix them up and rent them out, and they get a nice income from them. So you're not just competing with other buyers, you're competing with these big guys who have all cash. They don't need mortgages, they just go and buy these things. So that's why home prices are going up so dramatically right now.
So we're seeing more and more people getting involved when it comes to home buying.
Very much so. And you really should know, if you're in the audience, if you're in a situation where you're thinking about buying or not, or getting a mortgage, move now because the prices seem to be going up even more. And same thing with mortgage rates. Mortgage rates are tied to the 10-year Treasury. Not that long, about 2 months ago, the 10-year Treasury was about 1.6%. Now it's about 2.2%. So it's gone up pretty dramatically in the last even 2 weeks or so. And that drags mortgage rates up with it. The 30-year fixed rate mortgage had gotten down to about 3.3. Now it's about 3.8, 3.9, something like that. So still below 4%, but a lot higher than it was, and it's going to go higher, clearly.
Some money insiders say when you look at these particular rates, we're seeing them at all-time lows. Chances are we probably won't see them like this ever again for quite a long time.
That's right. So that's why you should want to move now. So if your current mortgage is, I'd say, 4% or higher, you want to try to refinance while these rates are still below 4%. A website for that would be youcanrefi.com, youcanrefi.com, and they can help you refinance your mortgage. If you're buying new, you can get what's called the ARC loan, the automatic rate cut mortgage, and the website for that is arcloan.com, arcloan.com. It's a mortgage where the rate only goes down and never up. So if rates do fall again, it'll go down, but if you lock it in today, it'll never go up from there. So those are two places to get good rates while they're still below 4% or so.
Let's talk a little bit about health insurance.
Sure.
With the changes coming in health insurance, obviously it's having a dramatic effect on the financial institution and on individuals as well.
It is. So as of October 1st, the so-called exchanges, the healthcare exchanges, are going to be opening up. And as of January 1st, everybody's going to be under Obamacare and have to get health insurance one way or the other. It's already changing the market dramatically. So for example, a lot of companies have, if they offer a really generous healthcare plan, have to pay a 40% excise tax on top of it. So they're saying, let's not be so generous, okay? So it means that you as an individual are going to pay higher premiums, higher deductibles, higher copays, all the things, those $20 copays are going to be a thing of the past in many cases. If you're an individual and you need health care, you should do what I do myself, Daren, is what's called medical repricing. And there's a website for that too, medicalrepricing.com. And what they do is you get everyday expenses are cut 10, 20, 30%, and then you get a high deductible plan. The one I have is, for example, $10,000 a year. Because the deductible is so high, the premium is dramatically lower. Like I'm paying like $300 a month. I looked at a traditional low deductible policy, it's like $1,700 a month. And those premiums are about to go up because of Obamacare. So you want to get the premiums down, get the deductible up, and that makes it affordable, because you can't go without health insurance. It's a tremendous financial risk to do that. And
we're seeing a lot of people who have suffered with no health insurance whatsoever. So advice to those persons trying to get in right now.
This medicalrepricing.com is certainly a way to go. If you can join some kind of a group, maybe association, even if you're a freelancer, there's something called the Freelancers Union, for example, where you can kind of get in and get health insurance. To buy individual health insurance is very expensive, so if you can somehow become part of a group, that makes it more affordable.
Makes it more affordable. As this time of year comes around, one of the things that we're talking about right now is many college students. College students are now getting ready to graduate, and like I told somebody yesterday, you're getting ready to hit the real world, kid.
Oh yeah.
And after you hit the real world, boom, here comes that bill.
Student loans, which you don't have to pay while you're in school, now you have to start paying typically within 6 months after you graduate. This season alone, we're going to add about $100 billion in student loans as people graduate. We're already up to about $1 trillion in student loan debt. And it's an enormous burden on people because the average is $27,000 around the country. That's the average. But a lot of people have way, way more than that. So you want to get those student loans. The first thing you can do, if you can, is consolidate the student loans from many different loans into one at a lower interest rate, typically about 3%, something like that. A website that can help you there is consolidatecollege.com that can help you, all these different loans, have it in one place. And there's also something called the IBR program, which is the income-based repayment program. If you work for the federal, state, or local government, you work for a nonprofit group, there's various other criteria. You pay your student loans on time for 10 years, and after 10 years, no matter how much you owe, it's completely forgiven. So that's a lot of people don't know about that. That same website I just gave you, consolidatecollege.com, can see if you can qualify for that IBR program. So it's an enormous burden and it's slowing people down. Because of the student loans, people aren't getting married, they're not creating households, they're not getting mortgages, they're going back and live with their parents in the basement,
Right, exactly.
That's hard on people, it really is, because they want to get out and be independent after they've graduated.
I want to go over some of these misconceptions about student loans because people think, they go away. The truth of the matter is...
They do not go away, even in bankruptcy. Okay, there are only two loans that do not go away in bankruptcy, student loans and IRS debt. So even in your grave, you can't get rid of the things. No, you can be delinquent, but you can't really default on student loans. Currently, it's about 17% of student loans are delinquent, meaning people are behind in their payments. But the interest and penalties just keep piling up, so you can't get away from that.
Are there ways to negotiate when it comes to interest and penalties? Say, for instance, you've been behind 4 years, and now you want to try to get back on pace? Is there something you can do?
There are student loan settlement services that can help you settle the student loans and get rid of the interest and penalties. I'll give you a website for that, too. StudentLoanHelpToday.com can help you settle your student loans for 20, 30, 40 cents on the dollar, depending on what it comes down to. I've got a website for everything,
Yes, tell us about the website.
So get StudentLoanHelpToday.com for settling, and then ConsolidateCollege.com for the consolidation. My website is MoneyAnswers.com, and I get emails from you folks all the time, and glad to help them if I can.
And when you talk about money answers, obviously a lot of people are worried right now with the economy. Some people say it's on the rise. Some people say, listen, it's not doing too well. Should this be a good time to invest?
Really is. The stock market's been soaring. I mean, the Dow Jones is well over 15,000. Because interest rates are still relatively low, earnings have been strong, lots of money still on the sidelines still to come in. So yes, in your 401k, you can do mutual funds, you can do individual stocks. Keeping your money sitting in a checking account earning zero, you're not going to get ahead.
Right.
You got to learn to take a little bit of risk. Maybe a simple way to do it would be a high dividend stock. Like in New York, Con Ed would be an example. Yields about 4.5%. So, instead of just paying your electric bill, you can kind of receive some payments from them as well. Some high-yielding stocks would do well. Just keeping your money in a CD, money market fund, you're not getting ahead. You don't want to do that.
So it's about time that you get out there and risk a little bit.
Absolutely. It's paid off for a lot of people.
Well, before we let you go, once again, let's get the people some information as to how they get in touch with you.
MoneyAnswers.com is my website. There's a little Ask Jordan button. I'm glad to help there. Whatever financial problem they've got, I try to help them.
We asked Jordan here. You can ask Jordan on MoneyAnswers.com.
You got
Jordan, good to have you.
Thank you, Daren. Appreciate it.